It's all about the spread, or is it? This year at LMAX Exchange, we asked our world-leading liquidity providers to create an even tighter top-of-the-book stream for our brokerage clients. Averaging 0.14 in Eurodollar this month, our spreads are the tightest they've ever been, and arguably the most competitive on the street. But we also agree with those that say, tight spreads, so what? Spread is just one of the metrics you need to assess when choosing your liquidity as a client, or particularly a brokerage client. You also need to assess the value of fill rates. Using market orders, as most brokers do, you'll achieve a perfect, near perfect at least, 100% fill rate on LMAX Exchange, something you won't see with last look liquidity. What about the zero cost of hold time, or zero opportunity cost? What about the cost of rejection? Zero. Estimated at an average of $25 a million if you're held for 100 milliseconds with last look. Up to $300 per million of price improvement, but agreed averaging $10 a million in 2016. Finally, you should look at your market impact post-trade. But frankly, when your flow looks like this, the typical broker flow, there's very little market impact, and you should expect only the tightest spreads. So in summary, spread is important, but that's why we've brought you better price this year. But you need to be able to measure your total cost of trading. We're confident your total cost of trading will be lower on firm LMAX Exchange limit order liquidity. And with the upcoming Global Code of Conduct about to launch, with an underlying message of greater transparency, you need to have firm liquidity in your armory to show your customers that you provide them with access to only the best and fairest liquidity in the marketplace. If you're still not convinced, please feel free to ask us directly. Email brokers@lmax.com.